Today we're going to be talking about both the cycle, the bull and the bear, and venture capital. And we're going to deep dive a little bit into some of maybe the spicier side of things. And so, Michael, do you consider yourself more of a bear capitalist or a bull VC?
I think both parts are important. You want to buy low in the bear market and sell high in the bull market. And that's whether it's Bitcoin or, in particular, altcoins and venture investments, because you're able to buy at the lowest point when confidence in the industry is the lowest, and yet the teams are the same. You're investing in people and technologies, and every new cycle, on the altcoin side at least, has a new narrative, and you have to be able to pick out what that narrative is and who the great founders are.
Vineet, where do you sort of see yourself and Sigma Capital? Do you get more into the bear cycle, or are you more of a bull market VC?
So I've done two funds in the past. The first one was in 2021 when we had those 300x's on paid networks pools. And I did the second fund during a bear market. We did 120 investments in the bear market. Today, when people look at VC, they say it hasn't performed. I did a 5x in less than 2 years. Sui was an investment which gave us $100 million. Peak was something that gave us 70x. Now, what I think is you definitely should invest in a bear market, because at that time, a lot of legit founders are out there. Anyone who's building in a bear market is true to building. In bull runs, you have a lot of noise. I think for bull runs, you need to be raising capital as a VC so that you can deploy in bear market when great founders are there.
So as you're seeing, in crypto, we see a lot of things can change overnight, new technologies. Where are you putting a balance between risk and due diligence to be at the front of the line?
See, again, it's not that true that, overnight things will change. When you are a trader in crypto or anywhere, you need to be right 51% of the time. In VC, you need to be right only 10% of the time. VC runs on the 90-10 principle. 10 startups end up making you 5x on the fund. So I don't fully subscribe to the fact that, it's overnight things change. The second thing is risk and due diligence management is very critical. If I have done a 20x on Sui, I invested $5 million and it's worth $100 million. My total fund was $80 million. I need to take money off the table because this money will fund the next generation of startups. So point is managing that risk by selling at a certain time, and due diligence on founders, companies, startups, revenue models definitely is critical for building a good VC.
Michael, one of the things that we sort of see is almost an arrogance in some founders versus not knowing how to put together a pitch deck. What is the secret sauce for a founder approaching a VC?
Well, confidence is a good thing. Arrogance is not, but there's a fine line. And, some of the iconic founders, Travis Kalanick from Uber, Bill Gates, Mark Zuckerberg, were confident to the point of being over-the-top cocky. I mean, Mark Zuckerberg had a business card that said, "I'm the CEO, bitch," right? And, you look at them as some of the most iconic founders, and therefore when you find somebody who reminds you of them, you fund them, and then you realize that you funded Do Kwon or Three Arrows Capital, always up. And so you have to make sure that there's some reality behind that. But an equal sin is being mousy, being like, not really sure, reading off, I'm kind of going to do this, So the problem is that a lot of times there's some really great tech founders who just do not know how to convey to an investor. And so they just sit there coding, and I have one or two of these in my portfolios, great technologies, but they were never able to communicate to the market or to investors to really maximize their potential. It's been said that the perfect team is a hacker and a hustler. Because if you only have the hustler, then you're basically selling hot air. But if you only have the hacker, you never get out of the box. I mean, the best startups are when you have a tech founder who knows how to build software and build a team and take the bull by the horns going to the market. Bill Gates, Mark Zuckerberg, Michael Dell. Now obviously you had a combo with Steve Jobs and Steve Wozniak, but You have a hacker and a hustler, or you have them both embodied in one great founder, and those are the teams I look for.
And so you touched on something there, the hustler side of a project, marketing. And so when you're seeing founders come to you for money, are you asking them how much are you spending on marketing, or are you asking them for where that money is going to be going to? And is that a big important piece for it?
I don't necessarily ask it in quite that way. I want to know what their go-to-market strategy is, and I want to know who their customers are. If they're B2B, marketing's not that important. It's business development. How are you going to get into Oracle and Microsoft if you're selling through that channel? What are your relationships there? One of my portfolio companies is called Ease Protocol. They just brought on, former 30-year vet who ran the teams at Xbox and Azure, and he's marching them into those places. On the other hand, if you're having to go in and one by one get 1 million users, then you better know what your viral marketing approach is, what your way of sort of getting your your kind of MVP out there, and then getting the KOLs, and they don't have to be paid KOLs. Ideally, they're people who are influencers and they just love your product. If you look at all the great, look how ChatGPT went from 0 to 700 million users, right? It was basically because it was a great product and it had viral marketing. The original phrase viral marketing was from Hotmail, where you use the product and it actually had in the software built in. You like this, pass it along to a friend for a free copy.
So one of the things that we saw last cycle, a lot of founders mismanaged funds in some way, shape, or form, not on purpose. We saw a lot of different NFTs getting bought by parties being thrown, apes crossing tables and stuff like that. And now we see penguins across the board. Do you feel that adds a new community to a project, and should that be an approach that a founder takes of what community they want to be part of?
I'm going to kind of answer the first part of your question about sort of over-marketing before you know what you're doing. This is sort of a bull market disease, and it's not just in crypto. Look at the dot-coms. Back in the dot-coms, I raised, during the dot-com era, I had a company that, actually made money right off the bat. It was based on the internet. It was called Internet Wire. Today it's a $500 million company called Globe Newswire. It was the first, internet-based press release distribution system. And, but because we had the name Internet in our name, everybody wanted to just throw money at us as a dot-com. And, my competitors were out there, renting helicopters and flying it over the city at a conference saying, people will know our name. That's what my $100 million IPO is for. And those are all gone. The ones that spent the money on, things that actually got them customers as opposed to just got them buzz are gone. And so I want to know how the money is spent. I come from a marketing background. I, had a prominent PR firm in the dot-com world, and then I spun that off into what became Globe Newswire. I then, did the same in social media landscape, and then in crypto, not only did I start Bid Angels and get into advising projects and investing them in early 2013, but I also had pretty much the only full-service PR firm, and so we ended up working in the early days with Ripple, with launching Ethereum, launching Tether, and literally I was the only person in the market for about the first 3 years until David Waxman, who's up next, put his shingle up, started 2016. So, it was interesting to just talk to founders and see, how they wanted to go to market. A lot of times you can just educate them about the value of getting, really just a single piece that validates you. And, and that's the big thing. With launching Ethereum, we got an early piece and Wired about Vitalik's vision for the world computer, and that really helped. But what really helped the most was him talking in front of a crowd of developers at the North American Bitcoin conference, and they're all like, I'm programming, I'm signing up, etc. So know what your success metrics are is really the key.
Vineet, so as we were sort of talking marketing, do you see the same thing with some of the projects that you're approaching? And where do you think it's different? Do you think marketing is the catch-all, or do you think it's the product that is what needs to be really developed?
So I was actually at one of the booths over there, and I said, I'm not going to name any of these chains. You can guess them there. So there are 3 chains which are prominent right now. All of them came from the same chain. There's one chain which has a great marketer, one chain where the Wozniak is there, and one chain which is a mix of everything and has been an early starter. So though marketing is required because you need to get consumers on board, you need to have a great product and a great technology as well. Because unfortunately, people will come, communities will form, and in the end, no one will use anything. Having a great Uber app with no cars has no value. So the point is, it's a mix of everything. Founders, every Steve Jobs needs a Steve Wozniak. Without this, things won't work. For us, we look at a lot of things. We just, last cycles was all about how can we get these great founders who have the integrity to build a company. Because the biggest problem in Web3 is integrity. I'm doing a project now, 2 years later I'm doing something else, 3 years later I'm doing something else. In Web2, that is not the case. Founders normally tend to spend 5 to 8 years before they call it off on a project. So for us, it's all that. It's all about what are they building, does this have value? Are they planting trees in Africa, or are they building a DeFi solution that will see to it that stability comes to Africa and Latin America? And if they're building something for Africa, are they spending time in New York, Dubai, or actually in Africa? So for us, we look at all these things. And nowadays, what we have also started doing is looking at what is the revenue model out there. This is one of the games which we just cut up. It's one of the first checks that we are doing, $500,000 in. Those guys have 3 best licenses: the NFL license, the the FIFA license. FIFA doesn't have any more license. They have a real revenue model, a team that really is great. I'm not going on the token price, but in the next 5 years, if they actually get 50, 100 million users on board, they have a company, they have an Activision, or they have a Ubisoft. So it's all about looking at all those things. Founders, business model, what they are trying to do they have a vision, and do they have the runway to go there?
So then, one of the things that you talked about is all of the products that a founding or a project might have. Do you think that there's ever a time when there might be too much feature creep at the beginning rather than just getting an MVP out?
So see, again, in Web3, it becomes different. In a Web2, what happens is you raise a Series A, Series B. In 8 years, you keep on pivoting. I used to be a startup founder. I started as an audio guide. I went into tours and activities, meta search. I went into tours and activities. I went into B2B tours and activities. Nobody saw this because I was a private company being invested by people. But in this case, you're always out there. There's a community thing. Everyone's looking at your token price. So I do understand that, whole thinking that we should do this and we should do that. But definitely MVP has to come out. You have to put features, scale it up. If it works, get another feature. If it doesn't, scrap it up, go back, pivot, find out what is better, and come out with a different solution. But you need to completely innovate till you get the hook on into a product. So that's how I would say that too many features not required, but at least get something and scale it up quite well.
Now, Michael, one of the things that I love talking to you about is on the regulatory side of things. How have we seen since this last cycle to now regulations change, and has that changed both like maybe the overall VC approach, and how has it changed yours?
So that's part of what I call the macro, right? So I wrote this book last year, Bitcoin Super Cycle, talks about the effect of the 4-year cycle on Bitcoin primarily, and then of course ends up affecting the altcoin market. I've said many years ago that when Bitcoin gets a cold, altcoins get pneumonia, and obviously the opposite is true in a bull market. We're seeing it right now with Ethereum going up like $100 a day, and then alts continuing. We're getting into that last part of the bull market phase of the cycle. I call it Bitcoin summer, where altcoins and Ethereum tend to outperform, and the other 3.5 years is the opposite. Bitcoin is the better investment. But basically, with regulation, so typically, we had a 100x cycle in Bitcoin and then an 85% drop after the first halving. We had a 30x gain and then an 83% drop the second cycle. Macro is fairly neutral. During the Biden, Gensler, Elizabeth Warren years, we should have been about 10x based on that just logical trend of the diminishing returns. We only ended up 8x, which is still pretty good. Gold would have been fine if they went from 2,000 to 16,000 a year, right? Stock would have been ecstatic if they did 8x in a year. But it should have been around 10x, and what tamped it down was the regulation being negative. Gensler going out and saying everything's a security pretty much, and we'll prosecute you first and ask questions later. And then the rapid rise of interest rates. Here, under the Trump administration, you have the opposite for the U.S. Europe is actually under MiCA being actually worse in terms of like freedom of being able to do things that should be legal in other places. But if Trump goes through with the Clarity Act, they already went through with the Genius Act, that should be a positive macro, and that should take the logical 3x from the halving this year, which would put us around 195K, and grow it. Whereas if it doesn't quite get through, and the U.S. economy falters and tariffs go ballistic, then we won't get there.
So do you see with a lot of regulatory changes with VC approach, like is capital being deployed differently and more towards stables and security-based tokens and projects?
So we're about to see an avalanche of capital being deployed because, well, for example, last week they just said that you can invest your 401k, it's what, $9-10 trillion into Bitcoin and other digital assets. That's huge. You've got, trillions of dollars that are under the wealth management arms of, Morgan Stanley, JP Morgan Private Bank, et cetera, that are just waiting there. At least now they're able to say, oh yeah, you can go and buy an ETF, we recommend BlackRock, blah, 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 and maybe put 1% of your net worth in it. But when they're able to truly go in and embrace what they've been saying they're going to do, tokenize stocks, tokenize real estate, it's going to be a sea change, and you're going to have these wealth arms say you should put 10 or 15% of your net worth into digital assets and maybe 5% of the gold as a defensive measure against hyperinflation, the potential in the United States, and the adding of $1 trillion every 3 months to the U.S. debt.
Vineet, and the question sort of goes to you because you're a little bit more international. Where are you seeing regulations change, and how does that affect Sigma Capital on deploying capital?
So I have a very different view on regulations. I was in FII Miami when Michael was there on the table, and there were senators there, and there was the MoonPay founder, and they were saying the regulations are around the corner. And I asked them, what regulations are we talking about? And they said the stablecoin regulation. I asked a room full of 30 people, how many of you have used a stablecoin to buy a coffee? 3 hands were raised. Unfortunately, you don't do a lot of regulations for 10% of the world population. So for me, regulations are important. It brings trust. What does ETFs? What did ETFs do? They got capital in. But for me, education comes first. Till today, when I meet TradFi people, when I have met a lot of, I have multiple bankers who have joined me as partners. When we go to bankers and ask them what Ethereum does, trust me, 95% of these people don't know. You saw this yesterday.
So I wanted to touch on that because asking people to explain a smart contract, it's always when people are able to explain a smart contract, A, B always happens. You actually had a little different of a story approach because you talked to so many non-native blockchain people and you're explaining an Ethereum smart contract. Do you want to touch on that?
Okay, so we went, so a lot of money. We just announced a $100 million fund 4 months back, have just announced the first closure of a $35 million. And a lot of money has come from TradFi people. Imagine people who have $1 billion of trains in Dubai, or imagine a guy who has a pharmacy chain of 500 pharmacies. Now, how do you explain a smart contract to him? And this was something interesting where someone told me, you blockchain guys talk something which we never understand. And we had simple explanations. We said, when you go to a shop and ask for a Pepsi, a guy gives you a can of Pepsi. This is real world. But when you go to a vending machine and put $1 in and put D16, a Pepsi comes. This is a smart contract, a line of code that governs your transaction. Now imagine these lines of codes will control your lending, borrowing, your insurance, your identity, and a lot of things. Now these smart contracts are built on a product known as Ethereum. Just like blogs were built on bloggers, and a lot of other projects happen. Now, when you understand that this is what Ethereum does, you have to understand it's like Yahoo or Google. It's not gold like Bitcoin. And you had generation 1, which is Yahoo was there, which said directory structures. You said Google, Facebook, and Yahoo, Solana, Sui are the natural progression. These are companies. So when people understood about these companies, they understood that this is not a magic token. And they also then understood that when you invest in equity, you are investing in future revenue of a company. But when you invest in token, you invest in future process ownership. When the exchange becomes big and the trading is done on a BNB coin, the price of BNB goes up. But when revenue comes, it goes to CZ, the owner. So we have to explain it in that small thing, telling about parachains, telling about smart contracts in a very tech way. No one understands. And that's what we have been doing, educating people.
So one of the things then, the hard side of that, especially if we're working in different chains and ecosystems, Haskell is one of the hardest languages for me to understand. So when I get to talk with founders, I know I'm with a gigabrain, just to be simple. Do you ever feel inadequate when you're talking to some founders, or do you surround yourself with a team that can help you come to a conclusion?
Again, I definitely find it tough sometimes. Some of these guys talk so much crazy stuff that I personally don't understand. And that's why you have a CTO in a fund who actually goes in and does research on what they're saying. For us, I'm facing the people. I'm the guy who will be getting capital from TradFi into these things. I will be the guy who will get partnerships for these projects. There are amazing projects there, but do they have 10 million users? I would be the guy who would be getting a Damak in Dubai, or I would be the guy who would be getting some XYZ company to do a MVP for that. And I need to break it down for normal people to understand. So yes, I find it tough sometimes. We read a lot, but we read founders a lot, and we try to understand whether they can build the next big thing. And that's what I translate.
All right. Michael, one of the things that you said earlier, we're talking about not just contracts on chain, and we're seeing a big change as we're seeing new securities being brought on chain. We're seeing real estate being brought on chain, ownership titles. Where is the DeFi side of that, and where is it just providence? And is it everything an investment on that cycle, or is it just companies should be on blockchain?
Well, it starts with providence and moves to DeFi, right? And a lot of it is regulation. X stocks on Solana went from 0 to several hundred million in a matter of weeks, right? It hasn't happened with real estate yet because there's a lot more involved in terms of regulation. Same thing with private companies. I mean, you still have these ludicrous regulations around ATS, exchanges, the alternative trading systems, where if you're an accredited investor, you can buy anything, but you can't sell it to another accredited investor without going through these ATS exchanges, and that's ridiculous. And a lot of the accredited investor rules were from the 1920s and 30s, early 30s, to protect people from back in the days of the Wall Street crash. Literally on the physical Wall Street, there were hucksters walking around selling you stock that was worthless, and you couldn't research it because there was no easily available research. Today we have this thing called the internet, and you can find about anything between internet, AI, search engines, and back in the 30s you didn't even have television widely available. And so you're trying to solve the problems of 100 years ago today, and that's why I'm delighted that the new chairman of the SEC, the new chairman of the CTFC have been much more open in terms of saying this is a new era, it needs new rules. So, but I think that on the DeFi component, I'm an investor, in a company out of Atlanta called AI Quant Labs, and right now they enable you to go and invest in tokens on DEXs. There's like 1 million new tokens, including Pump.Fund, that come out on DEXs every day. They'll let you go with AI agents and just analyze 100,000 smart contracts a day, eliminate the rug pulls, the honeypots, etc., and then start trading them for you per your instructions. They're going to move into stocks as soon as they can. And that way you can say, hey, I want to go and put a bucket of money into upcoming stocks in Asia that are trading on these exchanges. That's going to be a game changer, because right now the equities markets, in terms of participants, are probably 20 times what they are in the crypto market, and it's just a matter of having the agent be able to enable that investment.
Michael, thank you. Vineet, thank you. I could talk with you gentlemen for hours. As we wrap this up, I want to thank everyone for joining us today. Michael, 10 seconds, final thoughts, words of wisdom.
The markets go in cycles. We're in a bull market right now. It's very fragile. When all of a sudden, something drops, we're down to like 40 fear and greed, and tomorrow we'll be back at 60. When the greed is at the highest, that's when you need to be selling and not FOMOing in. And when the panic is at the lowest, as Rothschild said centuries ago, you must buy when there's blood in the streets, even if it's your own blood.
Vineet, thank you so much. Final thoughts, words of wisdom, 10 seconds.
As a VC, I should be talking about price action of Ethereum being at $4,000, but I want to talk on something else. Unless adoption doesn't come, unless 5 billion people don't come on board, Web3 is not going anywhere. Talk about adoption, talk about getting users on board. Anybody who understands crypto will not die poor, but get adoption. Otherwise, we are just crypto bros playing with each other's money.
All right. Thank you, gentlemen, so much. Thank you, everyone, for joining us today. Shout out to everyone at Rare Evo. Thank you so much. Arf.
Enjoying Rare Evo? Then lock in your spot for next year right now. Rare Evo 2026 is already in the works, and it's going to be even bigger. More chains, more builders, more connections. Tickets are live. Go to rareevo.io/2026 to grab your early access pricing before it's gone. Don't wait. Be first. Be part of what's next. We'll see you at Rare Evo 2026.